Thank you so much. My name is Anastasia Bonholtzer. I am a mortgage loan originator at AMS Mortgage Services, and we are on the broker side of the mortgage industry. And I'm very blessed and fortunate to be able to, welcome Michael Kovary, who is the founder of AMS Mortgage Services here. I'm going to read his bio because I think it's from in his formidable years, it's very impressive of the career he's built and he's sustained. Obviously, we're in the cycles of this career is what we're looking for here, and I'm going to go ahead and jump into it. So he's been in the mortgage industry for 36 years. He must have started when he was 4 years old because I don't know how else it's possible. Michael Kovary's journey in the mortgage industry began humbly as a messenger responsible for certifying checks for closing. From the very start, he understood that no role in the industry is insignificant and that with respect must be the foundation of every interaction, whether it's consumers, realtors, or closing agents. When he began originating loans between 1989 and 1992, he focused on underserved communities, developing creative ways to qualify buyers without standard formulas. And this is the most impressive thing of all is in 1989, when the average 30-year fixed mortgage rate hovered around 10 to 11%, most seasoned officers closed about 48 loans a year. That same year, his very first in the industry, he helped 60 families become homeowners, proving that the best solutions aren't always the easiest. In 1992, Michael founded AMS Mortgage Services, a company built by loan officers for loan officers. The mission was clear: cut through the red tape to help more consumers achieve homeownership. What started as a 500 square foot office with 3 desks has grown into the largest mortgage broker in New Jersey and the second largest in New York City metro area. Today, AMS Mortgage Services operates with a team of just 65 originators, yet closes over 1,000 loans per year, a testament to its model of education, communication, and ethics. More than just a mortgage company, AMS is committed to matching every borrower with the right loan for their future. And on the personal note, I don't know how he has time, but he's a husband of 35 years. That's impressive. Father of 3, a leader of an incredible team. And his great passion is training the next generation of mortgage professionals to succeed with integrity and staying power. Michael, I am just uber impressed with you. I have been from the moment we met. You're
Thank
a
you.
man of great integrity, and you always answer my questions, which is even more impressive because I asked a lot of them.
Well, nowadays in the mortgage industry, one of our biggest, I think the biggest complaint that I ever hear in the mortgage business is you can't get your loan officer and they lied to me. And those are two things that, I look to extinguish quickly. I pick up the phone probably more times than I should because the amount of robo dialers that are out there now, but I know all about Medicare and I know all about getting solar panels now. And I know all about green energy and because I get all those calls and extending my car warranty. But every once in a while, I'll get an actual consumer. So I pick up my phone all the time because there's
Why do
actually,
you think loan officers don't pick up their phone? Is it because they're lazy? Is it because they choose to make this a part-time industry? From your experience, what do you think?
I
Is it
think,
that they're scared to pick up the phone?
oh yeah, I think there's a fear of somebody on the other end. I mean, the fear of, in today's day and age, we're conditioned to be prepared. And when you don't know who's calling or you don't know why they're calling, you're not prepared, so you can't answer that question. The real answer is, and you could, to anybody in this room, anybody can call or in today's meeting ask a question. You're going to find if we don't know the answer, the first question is going to be, you know what, I really don't know, but guess what? I'm going to find the answer and I'm going to call you back really fast. And you
Mhm.
have to trust that I'm going to do that. And I think loan officers are afraid to say that. I think they're afraid to say they don't know. It's a sign of weakness. And it's not. It's a sign of integrity. It's a sign of learning. Not everybody knows every single product. I'll be the first one to say that some of these products that are in the mortgage industry today are something that I don't know or I don't want to know because my plate is full with what I'm dealing with. And there's some products, Anastasia, you know better than I do. And
Yeah, the
that's why
industry is definitely changing, right?
you
So
put a
when
good team around you. That's what you do. You put a good
yeah.
team around you to help each other out.
So back when you started in the late 80s, when the
Yeah.
rates were 10%, and now, everyone's complaining about the rates hovering around 6.5, what
Yeah.
was your biggest challenge back then compared to today?
I didn't know any better, so I didn't know it was a challenge. That was
Yeah.
that was the first part. And sometimes ignorance is bliss. That old saying is really makes a lot of sense. My first mortgage commitment I ever gave somebody was 11.5%. And they were happy to have a house. They were ecstatic to have a home. They understood what the payment is. At times we become a society where, and I'm not here to cure society's ills or problems today, but we become a society where we're 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 tagged to that number. How many consumers did we see really lose buying opportunities in 2023 because they were waiting for interest rates to come down? Now in 2025, they lost 50 to $100,000 in equity or more because they didn't buy, because they were so focused on the rate versus what the payment was. So a lot of the times we talked about what the payment was and could they afford this payment? Because the key is neither you nor I nor anybody in this room are the people who are making the payment. The consumer has to be comfortable.
Yeah.
And once they get into the house and they realize gains through appreciation, then they can kind of sit back and always refinance if rates drop. And what happened in 89, we had, at the time, we had the one of the worst housing crises ever in the late 80s, only to be trumped by the one in 2008. And I've lived through both of them. And what we had in 89 was a lot of people who wanted to be homeowners who felt that they missed the boat in 1985, 86, 87. And they wanted to be homeowners. They didn't know that they could be homeowners. We didn't have as much information, and we didn't have as much misinformation. We have so much
Yeah.
misinformation today.
Because it seems like the media now controls so much more of the perceptions that are out there. So it's almost harder for us to do our job because we're constantly being badgered either on our phone or on TV or whatever, rates are high. It's impossible to get a house, so it's like almost like we're conditioned to be in the negative already in this space. So how do we
Well,
overcome that?
we need to understand the tools that we currently have today. Again, you have media that says, you have the legacy media from television, radio, etc. You have social media now that says things. The best consumer is the consumer that gets educated. That's the best consumer. It always is. The consumer that walks in that already knows all the answers, they usually hurt themselves in the buying process. But the one that wants to get educated with a really good realtor, a really good mortgage professional, title, insurance, and they learn what it is to be a homeowner, winds up becoming your best consumer in the long run. And it always has been that way. There's been shortcuts that have been taken, and what we now need to do, and we've talked about it in our meeting, we have weekly meetings, everyone. We have Monday and Tuesday meetings, and they're focused purely on education. And one of the things that I've told everybody who shows up to my meetings are, we are now in a position where we need to help realtors sell houses. That's where we are. We're not in a position to sell houses for them. They're the professionals. But we need to be in a position where we can help them convince buyers that it is the right time for certain homes. Not every home.
Yeah.
I mean, obviously, there's not a universal tendency to that.
And I'm going to piggyback on that because yesterday we had a meeting and we were talking about if there's a house that's sitting on the market that needs a little bit of TLC. And yesterday we had a lender on who indicated that if you're a consumer and you don't have even the means to buy a fixer upper to actually fix it, they can do so with a down payment assistance program and do a 203K through it. So it's like, not only, so these options are out there and, we can, in a term, help the realtors sell the home by having this loan that actually will cover a greater portion of the consumer out there, right?
Yeah, it's, we need on the mortgage side, we need to help become marketing experts for our realtor partners. That's what we need to do.
Yeah.
Instead of having any adversarial approaches, we need to be partners. One of the things that I've told everybody in ours is the simplest way to help out a realtor right now is go to a Zillow, see what properties are on the market for more than 100 days. Those properties do exist, and figure out a way to help that realtor market that property so that maybe it can move. Maybe it can't. Maybe there's things in the way, ownership and estate issues or something along those lines, but maybe there is. Maybe do a video outside of the property and send it to a realtor and say, here's a video to help you market the property.
Mhm.
Something along those lines where we can help. Not every property sells within 30 days, and not every closing is a 30-day closing. If they were, we'd all love it. We'd all love it. We've tried to make that occur. But now what's happening in our industry as rates have changed, very similar to 1989, very similar to 2010, 2011, we now need to get into different products, variable, not variable rate, but variable income qualifications type products. We need to get into these things, even though they're not our priority or they're not our choice, but we need to understand and learn that they exist so that we in turn can help realtors sell more properties. And I think over the
Yeah.
next 3 years, and I know I'm kind of jumping ahead a little bit, but I think over the next 3 years, more of these alternative products are going to be used than are currently being used today. And bless you, Fiona, that looked like a sneeze. No problem.
And yeah, I mean,
That
that's
looked like a sneeze.
you put up a good point and a segue to, it seems like back in the day, and I don't want to age myself here, but I was born
You already aged me,
1984.
but that's okay.
I
You
didn't
can
I
age
didn't
yourself.
I didn't know anything about loans back in the 1984, but I imagine in the 80s, 90s, or even early 2000s, we didn't have these creative loan options. We did in 2008, and they got us in a lot of trouble. But then
Yeah.
after that, things have changed. The industry has changed. So tell me, what do we have today that wasn't available then that we could use as an asset in terms of getting more people into homes?
We have a lot of the same tools as we had in 2008. I mean, we have more tech now, and I'm not sure on a mortgage end, tech is helping or hurting. It's certainly making it faster, but it's not necessarily, it's not taking the place, I think, and this is my position on tech. Tech is making things faster, but it's also allowing the less educated, the less intelligent mortgage rep be able to pretend that they're smarter than they are. So I don't know if it helps or hurts in the long run, but as far as mortgage product goes, one of the best products out there right now that I think is not being used as much as it should be in the self-employed community is the bank statement program, because that program is really helping self-employed borrowers out without the need of tax returns, without the need of really, large down payments. And the rate is about 0.5% higher than normal rates. So they're really not paying a massive premium for someone who's self-employed. So I don't think that quite gets used enough. I also think the bank statement program should be used on some of these investment transactions instead of these DSCR loans that maybe some people have heard about. A lot of people are using, well, if the rent covers the mortgage payment, they qualify, and it sounds easy, but now we're all freaking out over the appraisal and whatever the rents are going to be. Where if you use a bank statement product, more than likely they're going to get a better rate than the DSCR loan, and you're not quite as worried about what the rents are going to come in on the appraisal with.
Yeah.
And the chances are they've got enough deposits to qualify because you still get to count the rental income anyway. So I think those two products right there are not being used quite enough in the alternative world. I think in
Yeah.
the normal world, I think renovation lending, I think a first-time home buyer right now on a renovation loan would be a really great move for them. They can buy a home that might have a little bit benefit because it's been sitting on the market a long time. We're licensed in 9 states, so I kind of have to learn what the market is in Southern California where I live. But I grew up in New Jersey, so I know the New York, New Jersey metropolitan area. I work with loan officers in Florida and Texas and various other states. We did a project in Pittsburgh where the loan officer went to properties, and these are lower end housing prices. These are like $150,000 sales prices. And this loan officer went out and did a video in front of them and talked about how someone can buy this house and put in all new floors, all new kitchen, all new bathrooms, and make it their home instead of just a house. And it worked out really well for that loan officer. And she went from realtor to realtor, and we wind up doing a meeting somewhat like this. And people are like, you guys are doing things a little bit different. Yeah, because we're not order takers. It's a mortgage.
It's a good point. It's a good point you make about the renovations.
Yeah, a mortgage is not going through the drive-through lane at McDonald's. You got to have a conversation.
Yeah. Well, because the same thing, I'm currently doing a 203K for a consumer that closed on a purchase in November, and now we're doing the 203K portion. So we had to be in a super competitive time frame. We closed in 21 days, the original purchase. The consumer now had time to shop for and figure out what they want to do with the home. And now that we have a budget, understand what needs to be done to the home, now we're doing the renovation portion. So you don't necessarily have to do it at the onset of the purchase. You can have a quick close, do 3.5% down, 5% down, whatever it is that you can afford at the time, and then do the renovation portion 6 months, a year down the line, if that's what they're looking for. Exactly.
And that was a conversation we had talked about back at the time, because the escrow period was so short, you really couldn't do this loan ahead of time. You had to turn around and do it.
Yeah. So my next point is, with navigating today's market, we do have a question related to rates in the comments, which it's kind of going to piggyback off the question I have next is, with today's interest rates fluctuating, what advice do you have for realtors guiding their buyers through the uncertainty? Because the question that came in right now is, when do you think the rates will go down long enough for buyers to start buying? And that's almost like,
I don't think the rates are going to go down low enough that are going to convince buyers to buy. I think that if you're waiting for that time period, I mean, I think you're going to be waiting a long time. I don't think that we're going to see significant. We have a Fed meeting today. I don't expect the Fed to do anything today. And yeah, somebody just put up the cost of waiting. I think that appreciation is your sales point, that you really need. So there's two facts that went around. And I'm going to go really back. This is even before my time in the mortgage business. In 1973, people were waiting for interest rates to go down. There was an oil crash, and gas prices went up, and people were waiting for interest rates to go down before they bought houses. Interest rates didn't wind up going down until 1982. Okay. So, and they actually increased up to as much as 19-20% in the early 80s. So there was obviously a cost of waiting, because those people were waiting and waiting and waiting, and they were spending money on rent, and they never got anything from it. They didn't build equity, and they didn't have housing price appreciation altogether. And then most recently, I use an example of my niece who bought a house in 2023 for $525,000. And today houses on her street are selling for $675,000. So if she waited for interest rates to drop after they rose in late 22, she still wouldn't be recognizing that appreciation in value. I don't see interest rates significantly dropping anytime this year. Will we get into the fives? Possibly. I think high fives are possible, but is that going to move the needle? And I'm talking conforming interest rates with 20% down. Do I think that's going to move the needle? No. Do I think we're going to see much difference in change in interest rates between now and, let's say, July 1st? No. I don't. I think we're going to see a little bit of rates are going to go up a little bit. They're going to come down a little bit. There's such uncertainty in the stock market right now based on the new administration and what's going on with tariffs, what's going on with Ukraine, Russia, etc. Gaza, you name it, it's kind of really up in the air. So I don't see things changing for quite some time. Now,
Yeah.
what does that mean? That means that we have to be better at what we do. I mean, that's really what it means. We close more loans at AMS in 2024 than we did in 2020 or 2021. And I attribute that to people going out and educating, going out and explaining why it's the right time to buy.
And education, I think, can also come from the realtor. And I think it's important for the realtor to be educated, understand what the economy is doing,
Sure.
what the different data points that are coming out, and not be fooled by thinking now that Powell is going to cut rates, somehow it's going to make any difference at all to the mortgage interest rates. And I think that's the biggest mistake, is the realtor almost makes a loan officer's job harder by not being themselves, understanding what the markets are doing.
Again, I said before something about being adversarial. It's not adversarial. We have to work as a team. If we work in an adversarial fashion, yes, that's problematic.
What would you say is the biggest mistake realtors make when working with lenders, and how can they avoid them? Is it because I know a lot of realtors work with like 5 or 6 lenders, and is that a good thing or a bad thing? And what would be some of the pitfalls?
I think one process, and I won't say it's a mistake realtors make. I think it's a mistake people make. I don't think it's realtors. I don't think it's mortgage people. I think it's what we make, is that we tend to stay within our comfort level as individuals. We have a certain comfort level, all of us. I have a comfort level. You have a comfort level. Everybody in this room has a comfort level, and we kind of stay in that. And we don't allow opportunities to come our way because we're nervous about stepping outside of where we're comfortable. And I think that's a people mistake versus a realtor or mortgage rep mistake. I'm not a realtor, so I can't tell you, I can't analyze realtors to that fashion. In 36 years, what I've seen as the most successful realtors are the people who, are the people who are going all day long, and they're constantly trying to learn more, and they're constantly taking a chance, and it might be a controlled chance. It might, they're controlling where their chances are. They're not going to Atlantic City or Vegas and dropping $1 million on black. They're understanding what's going on with the market, and they're taking, we used to call it a hypothesis in school. It's an educated decision is what they're making. And it makes sense to do that. So when I look at where we are, I think the biggest mistake all of us make is we complain, and we think complaining is going to cause a corrective measure, and only action creates a corrective measure. So, when I look at someone who is a salesperson for me and they're not doing very well, the first comment I make to them is, why aren't you doing well? And if it's, well, interest rates are too high. No, because we've got people in our company who've already closed 40 loans in 3 months, not even 3 months. So no, interest rates aren't too high for them. So what's the problem? Oh, there's no inventory. I don't know. There certainly seems to be inventory somewhere. Is there great inventory? Is there great property inventory? No, there's not. I mean, otherwise things would fly off the market. But you have to find what motivates people. I think if you were to talk to people, and one of the things that made me successful in my early days is I went to underserved areas. I went to areas where people didn't believe they could get a house. And I partnered with realtors, and I said, let's take the chance to explain to people what it takes to get a house, and maybe you can get a house, and that you can make that house your home or become a real estate investor.
And those people end up being the most loyal consumer anyways. And they're the ones that refer you the most. Yeah, many times.
But yeah. I think that's one. I think there's also a commitment level, Anastasia, that, when we only have 65 loan officers, and that's by design. I'm not one of those people who wants 2,000 loan officers and, we have more loan officers than anybody, because we all know the 80-20 rule works. In real estate offices, the 80-20 rule works. In mortgage offices, the 80-20 rule works. 80% of the people, a business is being done by 20% of the staff. And I want to be able to work with people who are committed. So one of the things that I ask people to do, and you've heard me say this before, is if you look at someone, and anybody can think about this to themselves in the room, if you try and be the best you can be tomorrow, it's kind of like going on that diet on January 1st. I'm going to go on a diet. I'm going to lose weight. I want to lose 20 pounds. It never works. However, you know what? I want to lose a pound in the next week. Yeah, I can do that. Anybody in the room can do that. So I ask people to be 1% better every day. Can you be 1% better than you were yesterday? How hard is that? That might mean you've got to make 4 phone calls to people you don't know, because that's going to make you 1% better. How hard is it to make 4
And I think
phone
you bring up a good point. It doesn't have to be in high volume. You don't have to make lists that are hundreds of calls long. And that's what I tell realtors all the time is if you can't call 25 people, call 10, call 5, call 1 person, at least do something.
If you're 1% better every day, in a month, you're 30% better than you were the previous month. And 30% is a heck of a number.
Yeah.
Now all of a sudden, but you have to do it every day. You have to be 1% better every day. And that to me is big. I got called last week by a realtor I live in Huntington Beach. And I got called by a realtor out of the blue. And I wouldn't have known if it was a realtor if I didn't pick up the phone. So maybe your first goal is I'm going to pick up every phone call. Somebody called me earlier today and asked about this meeting. And I just went, I said, yeah, you can sign it. We don't have another one scheduled, but we certainly can schedule another one. But we don't have another one scheduled yet. We're going to do the first meeting first, but come to the meeting. And I don't know if that person's in this room now. Hopefully they are. But if I didn't pick up the phone, I wouldn't have had that exposure, that experience. But I got called by a realtor in Huntington Beach. She's like, I've got a cash buyer coming in from Texas who's looking at properties that yours might meet. Would you think about selling? You know what? I didn't think about it. What do you think you can sell my house for? Instead of saying no, I engaged in a conversation. I didn't think about it, but what do you think you could sell it for? I'm sure she got a lot of hangups. I'm sure she got a lot of people who didn't answer the call at all. But I answered the call. And you know what? I have her name. And if I were looking to sell, you know what? She's a hustler. She's making phone calls and she doesn't know what the result is going to be by making the phone calls. There's value to that. So I look at being 1% better every day. And I think that starts with just asking yourself, every morning, what can I do better today? What can I do better today? And you can take that to a home life and what can I do better as a husband, as a father, as a person? What can I do better today? And that's, to me, that holds a lot of value. And that really puts you in a position that you can help other consumers and you can help other people. Because I think
I love that.
Ultimately, yes, we are all in a for-profit industry. I know it's not chic. I know that for-profit is not exactly, the correct thing to say nowadays. We are in a for-profit industry, but it usually feels good to help people at the same time. I haven't found anybody who's helped anybody that hasn't
for
felt
free.
good about it.
Yeah, exactly.
So we're there to help people at the same time. So I guess
Now,
one of the questions I would say is, how can we help anybody in the room today?
Yeah. Any questions, guys? Because I know we're going to be wrapping up. So I'll take 1 minute, 2 minutes for questions. Any specific questions related to mortgage industry? What you're currently struggling with. I think we'll take one question right now as we're exiting out. Anyone specifically struggling with anything? I think mindset is everything.
I'll make this comment.
Yeah.
Anastasia is available to everybody. I'm available to anybody if anybody has any questions. Reach out to me. I'll be more than happy to help you if you want to try and put together something on a marketing end, if you want to try and put together something on a philosophical end, if there's any way any of this inspires you to do more or be better, let me know and I'll be more than happy to take the time and do a one-on-one with any one of you.
Yeah, I appreciate it. Thank you so much. Anybody, again, open forum for last questions. We're gonna then close out. I appreciate Michael so much for your time.
Take care, everybody.
Very inspirational, inspiring, and I hope we can walk away being 1% better tomorrow.
There you go.
All
Take
right.
care.
Thank you, everyone. Have a good one.